No music this time. All right. Well, good morning, everybody on social media. That was fun. All right. Make sure I'm not muted. I always like to quadruple check now. First we checked, then we double checked, and then we triple checked. Now I'm in the habit of quadruple checking because I don't trust this platform. All right, let's get my screen share started. Let's go there, click the button. So you guys in Discord, let me know if you can see that. I know you guys can hear me because you're responding to my comments. Hello, hello. It's happy to be here Tuesday morning. We got Majestic. How's it going? Were you and Deathgun able to coordinate and get your education moving forward, by the way? We got all eyes. Oh, sounds like a really painful experience if you're out in like a windy environment. I don't know why I can't talk today. I gotta drink more Monster. Charlie, what's going on? J-Wag. It's what do we got? We got Money Monday, then we've got what, Tender Tuesday? Warrant Wednesday, maybe? I don't know. We don't do warrants on that. What's up, Ramir? Tammy, Janie G, Duco. Let's make this bread. What are you looking at, Duco? I'm looking at DFLI, Dragonfly. The challenge is that this is a 26-cent stock, so I got to be very careful. Oh, Trillionaire Tuesday, that makes more sense. Yeah, tender is like an old world term. Stock. So MedP, it has a $8.8 billion market cap, almost 8.9. And their volume for the day is 44.37K, and they're up 50.5% for the day. That is obnoxious. No me gusta. They got about 6 million shares. Restricted, so about 3.5. Yeah, all right. What do I think about Open? Enrique, great question. What do you think about Open? What do you like about it? I think we've been watching Open like a bunch of hawks, and I think we made a bunch of money on it. Now, I haven't traded this one personally on this account, but I have had some for a very long time on my old account, sub-dollar, and I'm out of it already. So take that for what you will. This is one of our old favorites. It's not one that we like to hold. Well, I can't speak for everyone, but it's not one that I personally like to hold on to for very long, given these prolonged periods of downtrend. This is Open, Duco, OPEN. But it is nice to run into these little zones and kind of trade the bounces and things like that. But I'm already out of it on my other account. So, okay. You said I'm very, very new to this. Wanted to see if I should trade it or not. So let's take those two phrases and apply some risk management to it. Okay. So if you're unsure whether or not you should trade something, and you're also very, very new to it, let me ask you a question. What do you believe is making you feel tempted to trade it? And do you feel like you'd be able to effectively manage your risk? And does that align with your goal of making money in the market? Because that's, you kind of answered your own question, right? If you're new to it and not sure if you should trade it, then I don't want you to rely on me or anyone else to tell you whether or not you should trade it, because that's how you hurt yourself. And that's a cycle that a lot of new traders fall into, and that's what we're here to defeat. I want to help you break out of that cycle. That's the whole point of what I do here. So I'd rather just get you some education, some equipment, and some confidence, and that way you can trade for yourself by yourself. You can always paper trade it. Just grab some on a simulated account if you'd like, and then see how it goes if you want while you're learning. You're looking at me. Well, Duco, you can't see my account, or you can't see my camera in the Discord. I guess I should close my Monster, or my. I was reading the chat as I said that. I guess I should close my window, my blinds. I should open my Monster and put it in my face, and then deplete it. Let's do that. So KSS, obviously, we've also made a bunch of money on calls here. This has run significantly in the past. I don't really like it right here, but I am watching it. Obviously, it's on my screen. I'm going to keep a close eye on this one because I know what it's capable of. Doesn't mean I'm going to absolutely trade it this morning. I'm just kind of getting a feel for the market, seeing what's going on, just like we did yesterday, right? We saw that there were some ebbs and flows in volume yesterday, and that's kind of what we're seeing again this morning on some of these little runners. Hey, alarm clock, good morning. Ooh, awfully chatty today. Um, okay. Hey, I'm not trying to promote anything. Just wanted to share blah, blah, blah. But I made 20K using this specific thing, and here's a link for it. It's not locked, blah, blah, blah. Okay, buddy. These spammers, man. They're killing me. Let me catch up on the chat here. Did that make sense, though, Enrique? Like, I'm not trying to destroy your hopes and dreams or anything, but I just don't want you or anyone else to copy trade or base your risk on what someone else thinks. I want it to be on what you can justify. So I'm glad you're here, right? That is something that nobody else out there is going to tell you unless they're required to by law, you know, because they're all trying to sell you stuff. We sell stuff here, but it's only stuff that can optimize your trading. And we only put it in front of you when it makes sense. The foundation's always free, and it never involves relying on someone else telling you what to do. We won't do that here. And if they do, you come straight to me and tell me, okay? Because that's unethical and illegal. And we ain't about that life. So I really, really like Dragonfly here. Now, the problem with this one, though, this morning specifically, is it had that big pop in volume. Like, this is good quality volume candle right here. You can see it's smaller in volume, but larger in price move, which indicates that there is, you know, good potential here. It had a good pure volume push, and then the volume kind of trickled down, and now we're kind of in one of those structural ranges, right? So those who were in Lifetime yesterday, you guys know exactly what I'm referring to when I say that. That's from here to here, roughly, right? So, you know, it's nice, but I need that strong, consistent direction of volume like we had yesterday on the 2 trades that we took. So for those who are new, let me put a link in the chat as well. There's 2 things that I want you guys to see. Well, okay. First off, let me shut up. All right, let me walk backwards. First thing I want you guys to do is make sure that you set aside some time Thursday morning, especially on the free side here, Thursday morning at 9:30. So market open. I want you guys to be right back here because Mad Maverick is going to go live, and it's his first. I want to say it's his first free market open live stream, but it's also, you know, it's a special one. So we're really putting a lot of focus on this one. He's putting a lot of work into it. So we want to make sure that everyone is here. Because he's going to give everyone that proper foundation, and it's a big opportunity for everybody. So make sure you guys are here Thursday morning, 9:30 Eastern, market open, and I will be reminding you all. I'm going to chase you down, and I'm going to be sitting in the back seat of your car when you get in from the grocery store. You're going to look up in the mirror, and there's Pookie with a sign that says Thursday morning, 9:30 Eastern. If you're in the Central Time Zone, I'll adjust it. Beb, Chris, what's special about it? We're going to have Canadians there. One of them is going to be named Chris, and it's going to be pretty awesome. I would love that. I don't know. We'll see how it goes. Man, I really like Cole's. I need to see more of a pullback on this one. It's too overextended. It's not to say that it's due for a pullback or any of that BS, because that's not accurate, but I just want to see some, confidence that it's going to still have bullish strength after a pullback. So I'm not looking for a specific retracement. I just want to see how it behaves when it pulls back. Will they bring pancakes, bacon, and maple syrup? No, they're going to have caribou sandwiches. Otherwise, those caribou died for nothing, right? We don't want that. So just be here Thursday at 9:30 Eastern, and then we'll make sure that it stops at the caribou. You know, we don't have to take things a little further, an extra step. You know what I mean? We want to make sure you're all okay and safe. Oh, Duco, I'm sorry, man. Your audio is cutting out. But let me put a link here as well. That's a 5-day free trial. So again, we don't shove products down people's throats or anything, but if you're curious about what's on the other side, let me put it on the social media as well. PE trial. And that link right there will get you into the 5-day free trial. So you're going to go on a wait list until Sunday night, and then Nikki will open it on Sunday night. And then that's good for a full week, the full trading week. So that way you don't miss anything, any of the live streams, because you get access to all the premium streams. You get access to the coaching streams, not the recorded education part, and not the chat channel. And that's only because we don't want to disrupt people that are paying. So it's just kind of a limited trial, but it's there. But definitely take advantage of all those coaching streams, because that week is that's your full week. So grab it up. So I'm still just kind of hanging out, waiting to see anything in the market that really gives me confidence here. I'm seeing a lot of shuffling around, but nothing that really indicates strength. right? I want directional strength. And for those that are new, I'm going to just place 2 buys. I'm going to use half my portfolio for each. I keep the risk nice and tight, keep the profits nice and early, and we just get that consistent growth over time. So I just have to wait. And that's the hardest part for a lot of traders, is that we all want to make money, but we all are also in a rush to lose money. So you got to be careful. And sometimes you wait and you find a good setup and you still lose, and that's okay. You get outvoted by the market. You're you can have all the theses in the world and you can have all the justifications, and sometimes it still just goes against you, but that's because your job is to be a professional manager of risk and not a professional guesser. So if you want to be a guesser, go right ahead, but that's not going to be sustainable. I may also be having some internet issues. Hopefully not. I'm seeing some of these are stuttering a little bit. Charlie says, I made 3 trades yesterday and I was using the hotkeys Pookie. Ooh, it feels like genie power. It's pretty nice, right? You don't have to work as much. You just push buttons. It's pretty clean. We are now in auction cross, by the way, so I am going to start looking for an active trade, and it might be KSS. Duco says, I did a bad job of managing my risk yesterday. What happened, buddy? What happened? I think I might try to grab some of this here. If we can break this wick up here. I'm going to keep a close eye on Coles. I really like Coles and Dragonfly, but I don't really like too much else right now. It might also just be one of those mornings where it's like things are just flat. You know, it might just not be a good morning to push anything aggressive. I think if anything, it'll probably be Coles. So let me get that order ready. Okay. And now for this one, right? It's got to go up to like 21.20. So we're looking for a $1+ move on this one. So it's pretty high risk. So as soon as I place my buy order, if I do, then I'm immediately going to want to set a sell order. And then I'm going to have to keep that risk nice and tight, because what we have here is this is an institutional signature. It's 3 wicks that are, sizable. So we don't want to get caught in that if that's an absorption into rejection. So here you can see we had 3 wicks, but it broke to the upside, and that's the kind of move I'd be looking for. But even this one, it was $2. That's great, but it wasn't, it took a lot of volume to push up that high. So I might just have to wait a little bit. What is the noon for KSS running? I have no idea, man. I don't care. No offense. I just don't. I don't need the news. I'll check here after market open. We'll take a look at that. Ooh, I like that. All right, I'm in. Now this is where it gets risky, right? Because we gotta draw some lines here. 2017 plus 6% is 21.18. So let me draw a line at 21.18, and I got to set my sell order up. So I'm going to sell 100% and set that to the last price, because I don't want this to turn into a wick. And I'm already about 5.5% down. So I'm okay to hold it a little while, but I don't want this to go punching through wicks or anything like that, especially with a 1.5 minutes till market open. So I just want a good clean pop to the upside, and I might take my profits a little sooner on this one if it doesn't have strength, right? Because I don't want these going sideways. I don't want them trickling down. I just want a good clean pop and a easy lock. Dugo says, I can buy 1 share of KSS. Okay. Well, I mean, if you can justify it, right? Again, I don't want anyone to copy trade me here, because this has a lot of potential to slam to the downside, and I'll be able to react a lot faster than you would. If you're basing your reactions on me, naturally I would have to go first, right? So let's take a look here. Chris M, I like WLGS if it holds over 8 cents. Super risky stock, but in an uptrend over the last few days with volume picking up. Yeah. So this one is starting to push lower here. It's not quite punching into these yet, but I also don't want it to go down super far. So we got about 25 seconds till market opens. I'm going to sip some Monster here, and we'll see if that does the trick. And then as soon as market opens, I have my hotkeys set up so I can do my control 2, control 3 thing. So again, there's still strength, so I'm okay holding it, but I don't want to hang on to it too far. What's up with SEMR? I'll take a look at the other tickers here after market open. I just want to make sure that we're stable. All right, so the market is currently open. So I got to be very careful with which direction this one wants to go. Devran, what's going on, buddy? Says, oh my God, guys, I'm in a live stream late, but here. Well, welcome, buddy. I'm glad you're here. So right now I'm just trading KSS, and I might cut this one if it doesn't push. Like I want it to just blast. There we go. So I don't want it to hang out and go sideways and all that. So I'm going to hold my control key, and then that's going to allow me to, there we go. I'm out. No questions, no hesitation. I don't care if it goes up 200%. I don't like this setup. It's not quite showing the strength that I like. So I'm also going to switch this over to the 1 day now that the market's open. Because remember, I still have another trade, right? But I don't want stuff that's shaky like that. I want a good, clean, aggressive punch. So now I'm going to set this quantity to 48%, because if I try to use the full 50%, I can run into an insufficient funds issue and blah, 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 because I'm using half for each. And I don't want to have to deal with all that. So we can always find another trade that's a lot cleaner and a lot more directional. I don't want to try to fight through the potential sell-off in the market. Plus, at this point, I can use my other hotkey, which is just Control 9, so it sets a take profit automatically. And again, you know, I always like to say this: if I wasn't Pookie and I wasn't live trading on a live stream and showing proof of concept and all that, that looks nice. I have 2.56% up for the day. I can walk away. I worked for a couple minutes today, and I can be done. I don't have to keep working, and I don't have to. Really like that setup. I don't like it enough to chase it, but you guys can see the potential on that. So that candle is an 8, 10% candle, 11%, 12%. And if this is something that destroys your discipline or your psychology, talk to me, because this is the kind of stuff that new traders hurt themselves with, because they see something moving, and let's say they wanted to chase this right up here, for example, at 10% up or something like that. You can get in, that's great, but if you can't justify the entry, it starts to slow down and stuff, and then you're getting in when it starts to pull back, then you're going to hurt yourself. So there's a time and a place to get in after something's running. You guys watch me do it all the time. I'll let something go a little while, but it's not as that initial move is happening, unless you're very confident it's breaking over a structure point. So I'm going to wait for this one. I'd like to see a break over these wicks right here, at least. So, because again, I don't want it puttering around. I just want a good clean punch here. And this is going to be HTOO. So there we go. I'll go ahead and get in there. And I've got my level set here at 1109. So what I'm going to do is draw a line. Okay. And then I might just leave that order in place. I don't really like the strength on it. Yeah, I think I'm just going to leave that sell order in place. So I got two options here. I can cancel it, and then I can manually sell, or I can cancel it and put a stop loss in. But I think I'm just going to, yeah, you know what? I'm going to cancel it, and then I'm just going to let it play out. So I'm going to have my hotkey set up here, because I don't want this to go sideways. Again, I just want good, clean directional strength, and if it breaks, there we go. So there's no point in holding that one any longer. I just don't like it. It doesn't give directional volume, right? And that's not to say that it won't still go or can't still go, but I don't like when things like that go sideways. Because remember, my point, the whole concept here is that something should be breaking over structure. It should be showing good, strong directional strength, which we got. If I move this up, you can see it's disproportionate volume, and it just goes sideways. So there's no harm, no foul in taking a small loss or a break even, especially with these type of trades, especially within the first like 5 minutes. But I don't want to have a bunch of heavy drawdown. Okay, so I'd rather just kind of be slightly above break even for the day. And that's it. That's all I have to do. Just over and over and over again. This is hanging out right below the right below the target there. It halted. Scary. Did I look at SEMR? No, I did not. Let's look at SEMR. What do you like about it? This is not good for a day trade, if that's what you're looking for. Are you looking for a swing? I think I might have looked at this one last night on Austin's Market Mastery live stream. I think I might have put this one in front of him. Yeah, I mean, this one's okay, but it's not that great. Like the financials in the company are absolute garbage. So you've got potential here on the chart, but the likelihood of that fulfilling that potential is not something I have confidence in. And I think Austin might have said the same. It's a good product, but it's a really bad company as far as operations goes, if that makes sense. But what do you like about it? Like, what specifically is appealing to you, and how what kind of risk management opportunity do you see here? I guess because you can't use the 1 hour, you can't use the 2 hour or the 4 hour, so you kind of have to use the daily time frame here. This thing just does not have a lot of volume. You know, it's got a 78,000 average volume, which is over the last, I think, 90 days or 30 days on average. And oh yes, 3 months. Okay, so 90 days. And then today's volume is a third of that, and it's already, you know, it's up 9.8%, which is great, you know. But you're also heading into a point of structure right here, so it's up to you. I just, I guess I need a reason to trade it, you know. And if your reason is based exclusively on something like this, you have to keep in mind this is strictly bearish volume. And when I say bearish volume, that's a concept. It's not actually the mechanism behind it. But the price went down this entire range, you know, so it's just very, very heavy. Dragonfly is pushing so far. It's kind of doing a push-pull. That's pretty nice. What was the ticker we were going to look at yesterday? There was somebody in the chat. I think it was Anonymous something. Let me see if he's in here. I think it was PELI, right? Wasn't it PELI and the GEL merger? Pelican. Well, looks like that might have already happened. If I remember correctly, I think they were going to offer 21 million shares for the entirety of GEL equity, which is bad for, you know, shareholders. Oh, what's up, Adrian Inc? How you doing? Yeah, so I mean, GEL we've looked at quite a bit. You know, I've traded this one, Genesis. It's just one of those companies that you have to kind of trade the volume while it's there and while it's directional. Or, you know, if you were in the lifetime stream yesterday, you would know that this is a structural trade, a structural chart more than a volatility chart. So, you know, there's potential here, but this chart is messy. This is more of a, I hate to use the word growth. But it's more of a cut out the noise kind of trade. But yeah, so again, I don't really like either of those companies, but I do know that there was a pretty heavy dilutive factor involved in that. So we got to be mindful of that. All right, so this one should be on halting in about a minute or so. Give me 1 second, guys. I just got to check something real fast. Okay. My Weeble's messed up. Sorry, I got a little pop-up thing on my other screen about they're trying to get me to upgrade or update the version of it. And I don't want to do that. But I can't close for some reason, I can't close the notification when it's on my other monitor, because that's where I normally keep Weeble. So I have to move the Weeble, like the whole window over there, and then I can close it. It's weird. So if you see me do that every now and then, that's usually what it is. It's just because I refuse to update my Weeble. IVF, it's all right. Just kind of chilling sideways. So let me ask you guys a question. How many people prefer to look at stocks that are consolidating or indecisive? Like, let me find some examples, because I think this is a good opportunity here. Okay, so does anyone disagree that this is clean directional volume in both directions? IVF has a reverse split in effect, so I don't know if I want to even scab it. Yeah, that's fair. That's fair. So I worded that weirdly. So you guys saying yes means that you agree that it is in fact clean directional volume, and that you don't disagree with that. Sorry, that was my bad. I've been in litigation mode for the last 3 days. Sorry. Okay. All right. And let's pop back over here. So this one would have hit target, and that's okay. I'm going to base my decisions on the amount of pullback that we had and the fall off in volume. So it's okay. Still followed my trading plan on that one. Oh, that's another thing. You guys can't see it on the Discord, but I do have a I made a OBS widget. I'll move it over here so you guys can see it real fast if you want. So you guys see these circles down here at the bottom? So if I update this, I have these circles here now to track my pennies essentially for the week. So I'll have that on the live stream for the week. So that way you guys can all see my pennies and how that goes. Hey, what's going on, Death Gun? How's it going? What are we looking at for NVIDIA here, buddy? Oop, that's not NVIDIA. Oh, yeah, look at that. Bum, bum, bum. What is the... Oh, we got to look at the news for Coles as well. I told Tammy I'd look at that. What's the news here? We got oh, suspected short squeeze. Yeah, you're not going to get a short squeeze on this. It's 107.91 million free float. You're not going to get that. That's just sentiment and short-term market hype. So that's interesting. So NVIDIA, let's take a look at that one. Yeah, so this one's looking pretty nasty, right? We got a couple 5 candles here and no recovery. Well, not 5 candles, sorry. You don't actually get 5 candle on that. You'd have to go to a higher time frame. So far in the 3-minute, we've got a 5 candle forming. But that's some pretty nasty business. So on the call side, I personally wouldn't look for anything under 169-ish, 168.86. Other than that, it's just got a lot of strength here to the downside, and there's not much anyone can do about that. It's kind of been doing that for a few days. So kind of crested there on the 18th last week. And then it's just been having these sharp bearish impulses the last few days. And then today just happens to be strong directional volume. So let's see if there's a news catalyst on that one. Oh, that's interesting. Sorry if you guys are watching the live stream here. The camera's probably covering the news here. Okay. So it looks like there's just some doubt with AI. Sales set to resume to China. Okay. Well, I think NVIDIA kind of has an unfair advantage in sales to China anyway, and as well as the American market. Like customers are reliant on products, and products are reliant on NVIDIA because they have a very aggressive hold over the supply chain. Interesting. You guys are throwing tickers at me. You guys tell me what you like. I want you guys to be confident in your trading assessment. I see a 5 candle roll here that's about to break to the downside, potentially. That is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 candles in a row with higher lows. And people are going to want to take profit at some point, right? Maybe. I mean, it's also a $470 stock, so it's more likely to follow that that analysis. Uh-oh, we just broke it. We just broke below the low. Let's see if it let's see how it reacts, right? That's the catalyst, and now let's watch the reaction. Is that thing going to push higher? Is it going to blast, or is it going to sell off to the depths of hell? And by that, I just mean a retrace. No idea. Let's look at Dragonfly. Dragonfly still looks good. Yeah, I mean, it's a good setup. I've made a bunch of money on this one. It's nice. It's clean. It's shiny. But with this one, you have to get in and out. You can't expect to have a good time if you get in and hold it. This one has good, clean, strong directional volume right now, but you got to be careful of these pullbacks because it's a lower float. 32 million. It's not bad, but because it's this bid ask will absolutely spread open very quickly once that volume falls off. So you have to be very careful with that one. Wow, you guys are just mixing the tickers up, aren't you? Let's see here. PW wants to look at TWG, Top Wealth Group. What do you like about this one? Are you looking for a swing or a day trade? All I see is a stock that sold off pretty hard, can't hold profits, and is actively bleeding. What specifically put this one on your radar? I'm actually curious. What about this one appeals to you? Who's feeding you this garbage? I'm just kidding. Like if you're trading stuff like this, you're going to have a bad time in the market if you expect it to go to the upside, right? There's a time and a place to scrape bottoms and things like that. But if you're looking at it when it's currently selling to the downside, and that's when you're placing your buys and you're basing your actions on the concept of dip buying and things like that, and the companies are not financially stable, you're going to have a very hard time. Plus, this one has almost a 60, well, I'd say 33% restriction rate, which means that they've got about 33% more shares that are restricted that they can add to the float in the event of a dilution catalyst. So you got to be very careful with those if they do run. So just be careful with that. 22% so far for Dragonfly. Good job, Chris. That's awesome, man. This, for anyone who isn't familiar with Chris's progress, it's a beautiful thing, and I believe your investment portfolio is also. You messaged me about that. That's going really well. I am still jealous of your portfolio, your ETF structuring. It's beautiful. But yeah, your speculation side is also just crushing it. You're fully out. It's good stuff, man. Did you just move a stop loss up, or did you use a hotkey? I'm curious. With Dragonfly's volatility, would a trailing stop work? So a trailing stop will work either way. The challenge with the trailing stop is that your order, once it's triggered, gets added to the absolute end of the line for market execution. And what that means is that, you know, limit orders get priority, right? So basically the market is like an auction house, okay? And the exchange has a little robot or a series of robots that sits in there, and it tries to match all these orders. It's like, okay, you're willing to pay this, and this guy has this shares. He's looking to sell it for this. So we're going to match these two orders based on quantity, time placement, and type, right? And depending on what order type it is and who's filing it and all that good stuff and the size of it, that's going to have more or less influence over the bid-ask spread. And that's what you see in the time and sales. Red orders are filled on the ask side, green orders are filled on the bid side, and that kind of determines where the price goes because it moves the mid price, right? And that's one of the most misunderstood concepts of the market. And that's why people have the wrong impression about numbers of buyers, numbers of sellers, because it's matched. It's the same. There's no weird imbalance or anything like that, except during auction cross, right? That's a very specific exception to that. Now, during market hours, specifically, you can use market orders and stop orders. And stop orders are triggered at a certain price and then executed as market orders because they're converted to market orders and filled. A regular market order, you go behind the limit orders, right? Because the limit orders fill at or better and they get priority. So let's say I had a limit buy order, let's say right here, for example, right where the price is currently at. The market would try to get me filled at or below, right? Because it wants to get at or better. And if I don't get filled at this level, I would then have to move this up, right? But let's say it's down here, placed a market order right there instead. It would fill all the limit orders first, which may adjust the price up or down, right? Because it's got to match them first. Then it's going to go through the market orders and try to fill those. And since mine is sitting in the queue, it would fill at some point probably up here. So I'd get a slightly higher fill, right? If I use something like a buy stop order, it would only activate once the price got up to my level. So if this was where my buy stop order was, and the price goes up here and hits, then it converts to a market order, then it fills, you know, somewhere plus or minus, right? To the downside, if we place a stop loss or a trailing stop, right? Regular stop loss gets priority and then trailing stop. So that was probably just a bunch of stop losses. And now your trailing stops would be probably queued in, right? So you might get filled a little farther down, but you'll still get filled if you use a trailing stop. And that's just kind of the disadvantages that if you got a stock that's moving down really quickly or it's less liquid, your fill is going to be much farther away from your trigger price. But since it's a trailing stop, it moves up a lot more aggressively with the price because it's following like think of two cars that are like one car is towing another one, right? It's got a chain in the middle. When the first car moves forward, that chain tightens and it pulls the second car. And just pretend that the second car stops immediately once the first car stops. But if that first car backs up, it's going to slam into that second car, and that's when your order gets filled or when it activates, right? So that's how trailing stops work for anyone who's not familiar. But there is a hierarchy as far as order type and execution that I don't think a lot of people fully understand when they look at the market. So, and that's something you're not going to learn on YouTube, like, because nobody out there is explaining it that way, because they kind of want you to misunderstand stuff, or maybe they misunderstand it themselves and they don't bother to look into it because, you know, institutions have a vested and significant financial interest in people following their secret playbook, right? So they're going to tell you how the market works, because that means that the masses are going to behave a certain way and they can exploit that. So yeah, they're absolutely going to tell us how we should think and what we think the market does and how it works without actually telling us how it works, right? Because they make money on the difference, on the gap between limit orders and stop orders and things like that. So let's look at Hood. Sorry about that, guys. I'm rambling here. Yeah, Hood, it just looks like it's selling off. So what are we looking at here? We're pretty overextended to the upside. We had a fall off in volume. We got earnings coming up. It's all doom and gloom and all that good stuff. Let's what's the news on this one? We had let's see. Oh, also, did you guys are you guys following the FINRA change, the proposal to the FINRA rule? I'll talk about that here in a second. I'm not seeing any news here. What's going on? I see Kathy Woods bought some stuff. What happened with what's the news here? How do I feel about SPY bouncing pretty much off 628.20 after open 15-minute candle? Ooh, let's take a look. Let's take a look. So you're talking about the 15-minute strategy? Ooh-wee. All right, let's get rid of that. Okay, so we got our 15-minute. We got our 15-minute candle range for our opening candle. Then we come down here to the 5-minute. We look for our close, and then we look for our 1 minute, and we look for a retest and a rejection off that level. So in this case, I mean, you get that, but it is very strong to the downside. And the challenge here is that you don't really get a bullish candle to then conquer. So that wouldn't have been a very confident entry, in my opinion, other than just a pure directional volume trade. But using that strategy, ideally, you want to see like a candle like this after this line, and then the color change to the downside. So it's a more aggressive entry if you did, and that's okay. But as long as you manage your risk. But that, yeah, that's just, this is pure volume at this point, and the volume is increasing as it slams down. So don't want to be caught in that. Let me just catch up here. Massive amount of new volume. Oh no, you're on SPY calls. How far out are they? I mean, I've been bearish on SPY for a long time. I know I'm kind of screaming the sky is falling here, but like, it's kind of, writing's kind of on the wall, unfortunately. I mean, it's just a matter of timing, right? And that's always what hurts people with SPY. It's always the timing, and it's almost always because of the IV and the theta. We got to be very careful when we deal with market overextension and things like that, especially with a you know, administration that's volatile. You got, you know, a lot of conflicts globally, domestic stagnation, you know, spending is up, savings are down. You know, it's going to be pretty tough for a lot of people long term in the market. They were overnight lottos. Okay. And you didn't trade puts, you grabbed calls. One thing I do want people to do is focus on Austin's Monday stream, or at least the levels that he puts out, because those have been nailing it pretty consistently for SPY specifically. I know there's other tickers and stuff in the mix, and not everyone's there for that, but the SPY stuff has been crushing it. So I never want to harass Porter, because Porter is his that's his information conduit. So if you're in the Discord, talk to Porter, talk to Austin, and we'll get you in there. I don't watch that and don't trade $600 SPY contracts. That's okay. I mean, the directional analysis is good. And then if for example, you're a small account, you could just come down here in the market open and just trade that directional volume on the farther out contracts if that's what you prefer. There's other ways. You know, you're in lifetime. You and I can work on that. That's easy. We can modify those specifics, but I don't want you to go against the market, you know. And if you're trading overnight, right, you really got to sell those pretty early in the day, especially if things go against you. Are you in bearish leaps on spot? Yeah, absolutely. So I have long-term leaps puts, and then I take short-term calls and stuff while this is going on. But I don't want to do that on this account because it's too small, and that would be really boring. But I also don't want to, like, I want to take the focus off of SPY because I see a lot of people getting hurt, and they're not able to absorb it. Like, I can absorb it, it's fine, but I don't want that to be what people see because that's not good for you guys. So that's a beautiful 5-candle setup, by the way. Holy crap! But this is still bearish in my opinion, even though you get a white candle here. Still super sketchy. MacApp, sorry, I just saw your message there. So you've been in H200. You were halted twice in H200 and still stuck. This halt has been 8 minutes. Can I get a quick explanation? Yeah, so basically, I don't know what kind of order you have placed. Did you place a market order or a limit order? If you placed a limit order and you're trying to sell and the price hasn't gone above it, or if it's a limit sell order, if the price hasn't pulled back up and over that, you're not going to get filled. And it might just be a matter of you just not making it to the front of the queue. I mean, if you think about it like a long line, and the exchange can only eat so much of that, right, before it halts again, because it triggers volume and volatility. So if your order is way over here and it's just taking chunks of it, think of like a red light and traffic, right? You can only let so many cars through before it turns red again. So all the cars of a specific type, which would be market orders, which are also, activated stop losses, those are all at the back of the line. So if you want to get filled quicker, you got to use limit orders, and you got to have a good broker that gets priority, unfortunately. So that's where it gets a little bit tough with these stocks that are less liquid. And this spread, like I was saying earlier, spreads like this one, spreads like Dragonfly and those other ones, those spreads can open up very quickly, and that makes it even harder to get filled because it has to reach that much farther to try to find matches, which means that market orders get pushed all the way back again. So very scary. This is a 26-cent spread at that point, which is kind of crazy. So I'm sorry you're in that one, and it sucks that it's halted twice, but it's pretty rough. It unhalted. I just took a $50 dive. I'm holding on, about to jump ship. Okay, so you're at this point, right? I don't know where you got in, but you've been through 2 halts, and it's down pretty significantly. It's down almost $1.50, which is more than 10% from where I got in, at least. That you got to figure out if that aligns with your goal of making money in the market. But again, I can't tell you what to do, and I can't say that it's not going to come back. But personally, if it were me, I would pick a hard cutoff. I would just say, okay, well, it's going up now, but maybe if it comes back down and goes below maybe like 869 or something like that, I'd just pick any level that I can justify and say, okay, well, let's say your break even's up here, right? Anything from here to here reduces that loss, which is great because that's your goal. You want to reduce your risk exposure. And you can just continually move this up until it stops going up, because what happens if it goes down, you don't want it to punch new low at that point. Or at least I wouldn't, right? Again, I can't tell you what to do. But if it comes back down and you were once up here, I mean, bird in the hand, right? So it's up to you, but remember, your job is to minimize risk and minimize damage, and it's not to be right. So if you're holding it and it goes up and you're waiting for it to hit target and it starts pulling back down and you keep holding it, that's a psychological barrier that we can talk about, because that's what'll hurt you more than anything. Duco, I lost interest when Shai started coming onto them. Not sure if they're still the same style stream. So he no longer comes to those because he got his new job and he's off doing the other media ventures. So it's just Austin, but look at that, it halted again. But we are also making a point to put like smash or pass and make sure that's on there and things like that. So it's going to be a little bit variable because it's Austin. That's just how he is. But that stream is just Austin now. He's back on. Robinhood offering Figma IPO. Well, I'm kind of avoiding IPOs at this point. Like they're just too uncertain, and a lot of companies aren't offering forward guidance with the administration and the tariffs and all that. So IPOs are just volume, So I'll wait till it comes out, But there's no point in what's the ticker on that? Is it Figma? No, that wouldn't be it. I personally would just wait and then just literally just scalp the volume while it's there. I don't try to predict or anticipate any IPOs or anything like that. Not in this market. Mac half def. I was using hotkey. Oh yeah, okay. Sorry, I already read that. KGC. What do you like about it? What do you like about your mining companies? Precious metals. You looking for a swing trade or a day trade? Shy's awesome. I miss him on those streams. He's like, I was in the room with him on a couple occasions. Like he's awesome in person. I will say the big obstacle with him is that when he gets going, like when he's in his hole and he's talking about the tech sector and all that, just you can watch people's eyes gloss over. Like if you're not experienced enough to keep up with that, it can be very difficult to follow what he says. So you got to be in tune. You want to see the day or even a few days? I like the VST. Okay. So what about the company do you like? If you're looking to hold it more than a day, are you've got earnings coming up here on July 30th, so 8 days from now. You've been kind of in a choppy range here for the last, couple of months. Price hasn't really gone anywhere significantly. Is this a long-term buy and hold? Is this just a quick scalp? Are you trying to do a quick breakout? What's your long-term plan here? And by long-term, I mean more than a day. I mean, we've already kind of like this gold mine is relatively well tapped at this point. Not to say that there's not more to give, but I just personally stopped looking at it. But again, this isn't like I'm not trying to shoot you down and I'm not trying to tell you to do anything, but I don't want anyone here to just ticker hop. I want you to find one ticker and figure out what you like about it. And then we'll have that conversation because you'll have a much more meaningful experience in the market. If you're just looking at the chart, that's okay. But if you're looking for more than a day, you really want to look at the company and make sure that you're not going to get blindsided by a catalyst. You just want to get a feel for something decent until this Thursday when I can finally get money on my people. Okay. So there's an itch to trade, right? You got that FOMO. You want to really participate. And you want to start making money, right? That's why we're all here. Okay. Now let me ask you a question. If you don't have, well, let's use an analogy, right? With a gun range. Do you have any firearm experience? Like were you military or just did you grow up with guns or anything? Are you American? Charlie says paper trade, prove the education, add money Thursday. Yeah. That's a great way to manage risk. What do I think about open? I think I've covered open like 5 times on this one. So we love open. We've looked at it quite a bit. I'll just summarize this for you. The main concern here is that this thing doesn't hold profits very well, and it's got a history of selling off. So I like to trade it when the volume is there, directional and strong and sustained. Right now, it's not sustaining, so it's very difficult to want to maintain anything other than just quick scalps in and out. Personally, but it's up to you guys. Open isn't on Cash App, which sucks. There's a lot of the ones you guys chat about. That's okay. So I don't want you to follow any tickers that anyone else says with the intent to trade them, right? I want you to find, some source, right? So if we mention a ticker and it happens to be one that you can watch, great. But what I want you to do is just build yourself a little watch list of maybe 5 tickers at the most, right? I don't want you to ticker hop every single day because it will destroy you. It'll destroy your discipline. It'll destroy your portfolio. And it will absolutely destroy your mental health. So I don't want that to happen. So instead, find a couple tickers that you like, and they can be large cap because you're just watching them. You're not looking to actively trade these. And I didn't see an answer. Do you Sorry, maybe I just missed it in the chat. Do you have any firearm experience? Like, do you use guns regularly, or have you been formally trained? Actually, I think this is a pretty good analogy. Okay, so nope, I've shot guns though. Okay, so no formal training, but you've kind of figured it out, or someone showed you the ropes. So what do you think would happen if someone had, okay, do you have more experience with firearms than you do in the market? Where's it going? Oh no, Charlie, I'm not sure yet. You'd say, okay, so you feel more confident with firearms because you've got more exposure to them. Okay. Now, what do you think would happen if you took someone that had no firearms training and handed them a weapon? Because they want to participate. They want to start shooting stuff. How do you think that would go? It'd be scary, right? Do you think there's a higher potential for harm to them or others? Okay. So how is the market any different in that, you know, you live in 2025 where you can literally just click buttons and execute orders and not really know what you're doing, and you can hurt yourself because things are moving fast and you have a desire to participate before you really go through the training and stick it around, right? Do you think the potential is higher for you to hurt yourself? That's not the perfect analogy. Well, it could be any analogy, right? Anything that involves damage, right? That's one Tagman used to use. He said, you know, your mouse is basically your gun because you can just click and do a lot of damage. But it's the lack of exposure. It's a lack of education. It's a lack of safety training specifically. So, you know, it's hard to suppress the need and the desire to participate, but you really have to think about where that need is coming from. What makes you feel like you have to trade? Because a lot of traders are in a rush to expose their money in a hurry, right? We're so willing to just throw money at stuff in the hopes of making more money that we completely ignore the fact that 90% of traders lose money, enough to the point where they wash out of the market within a year. So everyone's in a rush to do that. And I don't like seeing that happen. It's like watching a bunch of people just march off a cliff. I don't want that to happen. It's not necessary. You can go for a walk. It doesn't have to be off a cliff. You know, walk down a hill, just a gradual slope first, then find a plateau, and then climb a mountain, right? That's what we're here for. We're here to help you find the plateau so that you can stop going downhill, especially at a rapid rate and stopping at the bottom, you know. And I'm kind of rambling a little bit now because the market's kind of flat right now. There's not really a whole bunch we can do at the moment. So I'm sorry for the narrative part of this, but there's only two things moving right now and they're not that great. You've got Dragonfly sideways. Overall, it's coming down. And then you've got PLRZ, which is coming up, but it's kind of compressing. So you're likely to get like a wedge on that. Sorry, not sorry. That's kind of just what we have in the market right now. So what is making you want to go up to that cliff edge? Or any trader, right? It's always the same thing. People want to make money now. And that's why you're here, right? You found your way here on purpose. You wanted to do something. You have a goal in mind. You found one specific avenue to try to accomplish that. And you took a leap of faith to see if it would work and to see how efficient it could be compared to other ways, right? So is putting money into the market, no matter what amount it is, necessary? And does it align with your goal of preserving and making your money grow over a long period of time? Because if it doesn't, I got to ask you what you're doing, right? And I'm trying to use the Socratic method here because I can't tell you what to do, but I can say that if I could go back in time and have somebody kind of tell me to slow down, I would be all over that. I would be listening and taking notes and getting as much as I could, because it's not, you're not going to find your answer in the chart. It's not going to be technical analysis that saves you. And I know that's something I needed to hear, but nobody told me when I was figuring this out. It's going to be in the mirror, honestly. Like, this is fun. It's cool. It's a unique skill that can make you a lot of money on demand almost. Like, I can just go into the market every day and make money. That's pretty cool. Most days I make money. Some days I take losses, and that's okay. But I can't do any of that if I don't sit down in front of a mirror once in a while and be like, hey, I need to be able to actually do this with discipline, because that's where you hurt yourself. Because I teach very simple strategies. Like, here's an example right here. I'm not even, like, I promise I'm not cherry picking this. But I teach a very small, very effective strategy in which we use a tiny red candle and a color change when the trend is overall to the upside. And in this case, we've got increasing volume as well. So this would be a perfect example of clean entry, mechanical strategy, and defined risk reward ratio that's disproportionately larger. And it happened to hit and it kept going. But there's a lot of psychological factors involved in this. And first off, you see this uptrend, you don't want to chase it. You see some wicks and all that good stuff. And then you see a larger red candle to the downside. And you say, okay, well, it's starting to pull back. I'll wait for a pullback, blah, 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 blah. And then it pulls back a little bit more, but it's a smaller candle, decreasing volume. So you say, okay, well, maybe I can get in. Maybe it's primed for another huge sell-off. I'm scared, right? That's the initial reaction, is just fear, right? Because you see red and we're conditioned by trauma. So you might have passed that setup, even though it's a perfectly valid setup. And then, maybe you take the trade, maybe you don't, maybe you take the profits, maybe you don't. There's any number of factors that go into all that stuff. And then it keeps going, right? And then you got some choices. You're like, oh, do I want to chase? I don't want to chase. I've been burned by chasing. Do I want to let it go? And I don't want to let it go because I'll miss all my opportunity and blah, blah, blah. Right? And then all of a sudden you've got this trend line, and then you decide, okay, it's finally time to start trading. And then it starts selling off, right? There's so many thoughts and emotions that are put into the mix by what the chart does. Because of how we react to things, rather than just seeing it for what it is and saying, okay, well, the price happens to be going down right now. You don't need an opinion on that. Your opinion isn't going to change anything, right? So that's where people mess themselves up, is they allow their opinions to dictate their reactions, and then their reactions result in actions, and that's where we mess ourselves up so badly. But if you got in and you were done for the day down here and you can walk away, whether it's for a super tiny loss or a disproportionately larger profit, you would just be done, and you wouldn't need to be looking at charts for hours at a time. I only look at charts for longer periods of time for you guys. I'm only here looking at the stuff with you guys. I don't stare at the chart. Like, as soon as I'm off my stream, I usually just close my Webull, or I'll pop it open and have conversations with people about tickers that I'm not trading. But this is a side hustle. It's not something that dictates my life. Teaching you guys is something I commit a lot of time to, but I don't commit a lot of time to actually trading. I have like 4 or 5 small accounts. I just pop in and out. That's it. I'm just done. My long-term passive income, where I shove all those profits, that's compounded nicely, and that's allowed me to live a comfortable life, but it's not going to be here in the short term where I have to work for it. Otherwise, why would I leave my job? So there is a need and there's a want. There's a very strong desire to want to participate in the market while we're new, because we don't know what we don't know. But that is also largely the result of conditioning. And you want to be independent. You want to be, self-sustaining, and you want to meet the same end result that you see other people meeting. But we're also not seeing the other 90% that don't make that, So your job is not to try to make money in the market. Your job is to protect your money at all costs and to be selfish about it. And then your job is to find low risk, high potential opportunities and to manage your risk effectively as soon as you hit that button. So find reasons to not push buttons first. And then once you're in, find reasons to get out, right? That's the best, I can't say advice, but that's the best mindset I think I can try to instill in you guys, especially while you're newer, because that's when you're going to save most of your money. Because if you blow 90% of your cash, I blew 80% my first month. I just didn't know what I was doing. It's my life savings. I had to work my butt off to get it, and I blew it up in a month. I just didn't know anything. My mentor told me what to do, and he's like, go have fun. I was like, all right, cool. And then 80% loss later, I wasn't having fun. But he made me do that on purpose so that I would slow down, because I know I can make it back. Majestic says, and I just want to get some experience being able to read this kind of stuff better before I jump into something more detailed like Webull. So you're talking about Cash App or the streams and stuff. I just want to participate because there's so many opportunities still, especially me seeing a 200% gain in one stock. See, that's confirmation bias. That's FOMO, right? Yesterday, I can't remember right now the name, and also seeing MedP go up 60% this morning. It's very enticing. Yep. It's like every day they're just waiting to be jumped at, but I want to do it with logic and have reason I picked that one. That's beautiful. So you have the right limiter, right? You've got a filter in place that says you want to do it with logic and have reasons to do things. So let's build those out, because logic and reason is going to be your best friend in the market. because our brain are not when we interface with the market, our brain is not logical or reasonable. It's the exact opposite. It's irrational, it's erratic, it's unpredictable, it's unstable. And that's because our brain is hardwired for survival, and it needs certainty. It needs to be able to extrapolate reliably. And in the market, you can't do that, because you can say, okay, well, from here to here, it's gone up, right? Therefore, it should continue to go up. But then it can go up, down, or sideways, right? So it's very difficult for our brain to make sense of that in a way that we can use reliably. So we attach ego to it because we're focusing on it. We want to be right. We want to be compensated for our efforts and our risk. And when we're not, it creates a whole mess in our brain. And in Chicago, we talked about it very in depth from a neuropsych perspective. But basically, there's 9 major components of your brain that are involved in your decision making in the market, and they're all having different conversations, and only 2 of them are able to access the information you're seeing on the chart. Okay, the other 7 voices are toxically codependent on those 2, and if those 2 are not telling that the right thing, that telephone game gets very dangerous very quick. So you got to be able to slow yourself down first, then focus on building the library of references and the right mindset. Like, let's watch this, right? If this one breaks over, this is not to demonstrate proof of concept or a strategy. It's just to show a very simple concept, and that right now, if this was your strategy, you'd have 2 predefined outcomes. And at this point in time, this specific point when you would have entered, you would be fully accepting of those 2 outcomes. Okay. But what happens with our brain is expectations, they're malleable, right? So your brain is going to say, okay, based on everything I know, everything I can recognize, everything I've experienced so far, I can tell what this is. And I can say, okay, here's a justifiable risk with a good size profit and a low risk. I'm comfortable taking this. I understand there's 2 outcomes, and my job is to get out, right? Like, you can convince a situation like this where you see that green number, right? You're up some percentage at this point. And then if this turns red, this becomes an influencing factor, because you're like, oh crap, I was green, now I'm red, I'm going to take a loss all of a sudden, right? In reality, it's the same loss you were already okay with, but because you were exposed to additional information, it's somehow a different response to that outcome, right? And that gap is where our discipline gets destroyed, and that's where we compromise and fall apart. So I'm not going to focus on this trade specifically. I'm just demonstrating the concept. I'm actually kind of glad that it went up and then went down. So, but you guys hopefully can understand that. Like, this is not your job. Your job is not to try to force an outcome or to be right, right? Your job is to make sure that regardless of what happens inside this box, you're just as accepting of this outcome at the end as you were at the beginning, right? And that you're not doing analysis to try to second guess your, compromise your plan and say, oh, I should have taken profit early and blah, blah. Like, that's not your job, right? Because that all means that you're being given, and that is unreliable and dangerous. Okay. So I'm kind of going down this rabbit hole specifically because you're new and you're about to, like, you're feeling the pressure and temptation of participating, and you're about to have real money exposure, and that's very dangerous. So I just really want to emphasize the importance of you being here, right? And kind of having this conversation, even though I'm just kind of lecturing at you. So sorry. But hopefully that kind of instills the importance of it. But B, the fact that you haven't really put yourself in a position yet to potentially hurt yourself unnecessarily. You can always paper trade. You can always use small amounts if you want to, but even then it's kind of unnecessary. Like, a lot of people tell me that they need skin in the game to learn the shapes and colors part. And I absolutely disagree with that. You don't need skin in the game. You don't need real risk to learn shapes and colors. You've done it plenty of other areas of your life. You've learned other skills without risk. It's just something that we convince ourselves of because it makes us feel like we can justify taking that risk and we want to be compensated, right? So it's not a character building exercise or anything that requires actual risk. You can separate the 2 parts, right? You can separate the technical side of it, the skill set, from the emotional development and the discipline side. And a lot of that discipline is already baked into the skill set. So it's just one of those things where you just got to sit down and have a talk about, So let's take a peek over here at H2O. So this one looks like it keeps halting, and that's kind of the downside to these little sub-million float guys. We got to be very careful with those, and they got about a 10% or 11% restriction. So 10% of their shares they can dump in at any time. So sorry, I didn't mean to go like super down the psychology rabbit hole there, but that is the most important concept. Is just your job is not to be right. It's not to ticker hop or to find things that you think might blast and all that good stuff. It's to look at the market for what it is, to recognize that the market is always going to be right, even when your emotions and your feelings won't be. Your predictions absolutely won't be. And because of that, your job is to manage risk and not to try to predict or to get in front of things. That's mostly the result of just seeing profit porn or stuff on YouTube. I don't know why my Weeble's being super laggy. That's another thing too, is you got to be careful because like that was a huge change there. I wonder if Weeble's having issues today. So hopefully that all makes sense, and I'm not trying to chew on you specifically too long, but there's a huge advantage in internalizing that concept sooner rather than later, because I just don't want you to blow through your money, you know. And I want you and Death Gun to work together, because Death Gun is my little protege. I love it. Yeah, like Death, he knows. I taught him we chatted for 2 days. Taught him a very simple strategy. It's that same strategy actually. He's been crushing it in terms of risk management and execution. Love it. Just small, consistent compounding profits. It makes a world of difference. I wouldn't say loves necessarily. No, I'm just kidding. No, honestly, like you're my next lifetime member. We just got to get you to the financial area to make that happen. But that's just a function of time at this point. You're compounding, right? Your profits are consistent and overwhelming the losses that are small and insignificant. And your discipline it's locked in, and you're good to go. So for you, it's just a matter of time, and then we can optimize, right? We optimize the hell out of it. You were scrolling another app and swear you heard, oh, midget porn? Well, you might have. I don't know. That's between you and the Lord, sir. Rest and retire is great for investing long term. Yeah, I mean that's a huge one too. I mean it's more accessible than a coach. You know, not everyone can swing $40 a month, and that makes sense. But then again, if you're going to lose $40 in a month in the market, you might as well get some value out of it. So that's my personal opinion on that. But if you can't swing $40 a month, you can just do, if you want to, just the rest retire is a great place, in my opinion, to just park cash. You know, if you're just looking to slowly build into positions for long-term growth, I mean, a lot of them have just run triple digits at this point. Some of them have fallen down, and that's all part of the process. And that's why you build in slow and you use your own analysis and things like that. But it's very few based on the spreadsheet. I think there were like 3 or 4 that I saw, as opposed to like dozens. You know, at this point, we're probably in the plus 100 range. So, Duco says, okay, I'm guessing you didn't say it then. Thought it was some weird analogy or something. I mean, I can work it in if you want. I can make it happen. I don't think the audience is going to enjoy it. Tammy says, please don't. She's begging not to. Okay. I'll send you a DM, buddy. We'll work on it. Just kidding. All right. So I don't really have too much else to go over today. I mean, we did our 2 trades. I'm a little less positive than I would have liked, but that's because our second order kind of worked against us. And the first one wasn't really a 3% because we got a slightly smaller fill because of the shares, the price per share. But that's okay, right? We followed our plan, 2 trades, successful trades. Trade plan was successfully followed. We still end up net positive for the day, and 1% compounds efficiently 250 times a year as well. But we make more than that on other days. So I think we're good to go. I like to keep things fun, but we could skip that one. Yeah, I think so. It's probably best for legal reasons and all that. We'll come back to it. Death Gun, just enter my trade. Pretty sure it'll hit my stop loss, but oh well. What are you trading? What are you trading and why? Let me look and see if I can figure it out. Hang on. Are you trading one of these? IPF? Okay. Oh, yeah. So is the price going up on the 2 minute? Okay, let's take a look. So your trade, oops, is something like this. Somewhere around there. So you're looking for a 335, 336 target. Right? So now if I were to zoom in and I were to open my notepad, and then I were to shrink this down and completely cover the price. Okay. I think it's safe to say that the price is going to pop up here or it's going to pop down here. Is that accurate? And don't look up here, cheater. And I do this every now and then on the streams. It just makes sense to cover the price. And actually, I'm going to extend this all the way across so that we can't see the line. And I'm also going to push it over here so that we can't see the order book and time and sales. Now, one thing I do have to do, though, is skew that so that it doesn't shift as the price moves, because I don't want the axis to move up and down and just pop out the price. So there's two types of brain out there. One of them is comfortable seeing the price action covered. The other is uncomfortable seeing the price action covered, because everybody can agree that eventually the price will be up here or it will be down here. Is that something anyone disagrees with? Is there any pushback on that? I definitely just went somewhere. Well, we don't know that, right? If we're in the trade and we're waiting for it to hit one of those two levels before we have a reaction, we don't really need to know that information, right? We just let it go. It's going to happen one way or the other. Duco, can't see the field next to me anymore. About to get slammed with the rain. Oh, yeah, get a swall line. Might just stop working and sit in the truck. Yeah, be safe, man. You live in one of the most hostile regions known to man. It's like -60 and then torrential downpours. Craziness. So if I cover this price action, I can then sit with myself and say, okay, well, I don't really need to see the price action because me seeing it doesn't actually do anything, right? There's no amount of my willpower or me thinking a thought or me being able to analyze this into a successful outcome or profitable outcome is going to make this different, right? That doesn't factor into all. There's no way for my brain to interface with the market except for my buy and sell order, right? And I already did my buy order and I'm not doing a sell order yet. So what do and at which point when I do, it's no longer my issue, right? Because I'm out. That doesn't do anything. So what would be the advantage in looking at the price action at this point, if any? There isn't one, right? It doesn't matter. So instead, what I am doing by looking at the chart consistently and just watching it go is I'm finding ways and I'm putting data in front of myself to doubt myself, to doubt the initial analysis and to talk myself out of the trade. Right? Theoretically, I'm already comfortable with two outcomes, profit or loss, right? The loss should be smaller, the profit will be larger. So if I just sit here and stare at this chart and say, oh my God, it's going up and down, it's going up and down. At one point, it was right up here, 1 or 2 cents away from target, and now it's all the way back down here. That is going to wreak havoc on someone's psychology, and it is absolutely going to disrupt their discipline. So how often do we do this to ourselves? Every time we're in a trade, what do? We stare at it, right? That's your brain wanting dopamine because you get hits of dopamine every time you anticipate something. And that anticipatory dopamine hit is bigger than the reward dopamine hit. So I'm not going to go too far down the rabbit hole on this one, but there's a little drug seeker in your brain that wants more and more dopamine. So it's going to keep you glued to this chart, or it's going to have you looking at other charts so that you can find other opportunities to anticipate, right? And that's a dangerous process. And that's one that you have to kind of be aware of and then find ways to mitigate. So if you're comfortable just putting something over the screen or putting another window up in front of it or turning your monitor off, you'll hear the chime. You'll get a notification, or you can check back in on a periodic basis and see if it worked out. But you don't need to stare at the chart, and doing that is dangerous as hell. Does anybody disagree with that? Do you think you seeing this number or this bar move up and down after you're in has any impact on the outcome at all? Just we're all logical, rational adults for the most part. I mean, if there is an impact, I'm not aware of it, and I would love to. Like, that's got to be a new science. I mean, I would just be intrigued. And I'm not trying to put anyone down, but I'm just saying, like, that's how I think most people would agree that us staring at a chart has zero impact on the outcome. Yeah. So if you're a new trader and your plan is to develop discipline and consistent execution, and you get upset when something goes, 1 or 2 cents away from your target and then comes down and hit your stop loss, or vice versa, it comes down here 1 or 2 cents from your stop loss, you prematurely anticipate, and then it goes up and rallies higher than your target, and you have feelings about that, and it happens to you, every now and then. That's a psychology obstacle. That's a barrier for your execution, and we can work on that. So hopefully that makes sense. I do have to jump off of here, but let me catch up on the chat here because Duco's safety is number one concern. Just rain, not much lightning, small hail chance. I shouldn't melt. Sugar melts. A little chilly this morning though. Oh man, slowing down my day a bit. I don't like staring at charts. Yeah, that's let me pull that over here. So that's pretty small. I don't know why that's so small. Flashback. That's pretty blotchy, sir. Don't recommend that. You be safe, man. Hopefully that passes soon. Is this little gray dot, is that you? No, there's another one up here. Are you cloning? Are you Jeff Goldblum? Thought we took your machine away, buddy. Are you this blue dot? That makes more sense. Because you're glowing. I gotta stop. Sorry, I had too much, I had too many monster. One too many monster for me. Rare cities. You're blue dabba-dee. Okay. That makes sense. Gray are cities in probably England and maybe the northwest coast of America, Seattle. Get a lot of rain. Oh, that's a flashback, Duco. I remember that. Classic. All right. So this ticker here is currently at 317, which again, if we're not staring at the chart, we don't know that. Let me just move this over here. I'm just kind of extending that so we can have the full price range there. Has anything changed? Has the price broken out of this zone yet and prompted us to take action? From the time we simulated entry, Deathgun actually entered. Is that your stop loss, Deathgun? Are you stopping out at 314 or below? And are you taking profit at 336 or above? We're live trading with Deathgun. I can't trade this one, sorry. So at this point, right, this trade has come very, very close to the profit and then very, very close to the stop loss. How many traders do you think that would have destroyed if that was their setup? If they watched a YouTube video and they saw this strategy and that was the end all be all and they said, yes, this is the one, I'm going to do this. And then they get to the point where it's pushing button time and they just can't figure out why they can't push the button or not push the button when they're not supposed to be. Okay, so you stop loss 315, your take profit's 335 because you got in at 319.9. Okay, so you got in a little higher. Okay, interesting. But again, if you're in a trade, oh, that blip at 335 filled. Nice. So you're out. So you took advantage of the bid ask, right? So the bid ask opened up and you got filled here at 335 during the brief period of time it was up there. It's pretty awesome, man. So congrats, you made your trade. And that was an automatic order that was just sitting there, right? Now, is that your one and done for the day because you hit your daily target? Or are you going to continue to trade? There's no wrong answer. I'm just curious. Did you hit your daily goal? Yep, no micromanagement. Yep, all done for the day. Down to about 30% of my portfolio. That's beautiful, man. Just shy of 3% goal. So that's good enough then, right? If you have a 3% goal and you hit something positive, how many trades did you take today? Just your one. Beautiful. So you took one trade in a matter of minutes and you were done for the day because your one trade for the day hit your goal. That is a beautiful, beautiful approach to the market. And you didn't stress out. You set orders and walked away in theory. And you made sure that you managed your risk. And I think that's awesome, man. So I look forward to seeing you slam that in the profit channel so we can all hype it up. Did a great thing today, buddy. Do that 250 more times, and that will compound to a stupidly large number. It's kind of insane. And then just shoveling all those profits over into passive income makes the world go round, and then I think it's kind of freeing after that, right? Death Gun says, heck yeah, gonna go fill out my Excel sheet to update my weekly gain. Then I'll do that. Holy cow, my long term is down 5% today. What do you mean your long term? You have a long term holding? Babu Chris, for those who wonder what Pookie was talking about, this is me. Can't control my brain, and I'm so annoyed. Need to change strategy here. So what is your strategy currently? And is it the strategy that needs to change, or do you just need some work on the psychology part? So it looks like you had a 4.65% profit, so 200, and then a 262 loss. Okay, so that might just be a position sizing or psychology thing. So why don't you and I talk about your strategy? Was this options or over trading? Okay, so that's a psychology thing. That's always a psychological barrier. And options, okay. All right. Well, honestly, like only a 6% loss on options is good for most traders, so that's your silver lining. But also the fact that you still had a winning setup in the mix as well. That's also a positive. So we can work on that. Let's you and I work in the lifetime on your specifics. But I do have to end the stream here. But let's work on that because you were in Chicago with us. So I think a lot of the groundwork is already laid. It's just a matter of maybe flipping a couple switches for you. So I'm going to go on a limb here and assume that it's not your strategy. I think it might just be your position sizing strategy, maybe. But you said that you can't control your brain and you were annoyed, which means I don't think it's your technical strategy. I feel like that works. I feel like that's probably what it is. You're 200 up and kept going. Okay. So then we maybe put you in a position where that first trade gets you to a point where you're done for the day. Either we can find a way to bring that strategy result up, or we can bring the expectation down. We don't want to have them both move up because then the expectation will just be out of reach forever. Death Gun, I started a long-term portfolio for the passive investment 401k type thing, and that one stock I have in it right now lost 5% value today, and luckily I'm not down too much from my initial buy-in. Okay, so what company was it, if you don't mind? Like, is it one position? Is it are you diversifying? Do you have a allocation strategy in place? Because that's the next step, right? We got to build into that. What do you do with those profits and where do you store them? And if you're someone who's trading options, I'm not talking to you specifically, Deathgun, or even you, Chris, specifically, but if you're trading options and you're not able to find consistent profitable success over time, I want you to rewind the conversation to back when I was talking to Majestic about the need to participate. Because if options are working against you, but your analysis is otherwise spot on, or it's close enough where you can make it spot on, then it seems like that might be a little bit safer for you. And it doesn't have to be these market open scalps. They're fun and all, and they're fast, but that doesn't have to be that. One position in PL, 4 shares. I plan on diversifying more as I add into it. Okay. Still figuring out how to manage it. All right. So that is going to be its own conversation that I definitely want to have with you. And I think there's a good approach there. You're gonna stalk Lee bird watching, but it's Lee watching. We all should watch Lee. Let's go watch him. He's in the admin channel right now. Him and Porter and Duck are talking. But let's sorry, what was that ticker you wanted me to look at? Sorry, I saw it in the chat, but I kind of skimmed over it. CDE. Let's take a look at that. Another mining company. So what do you like about this one? Ooh. Right. So mining companies, they almost always rely on their permits, right? It's always the permits and their regulatory stuff. So let's go ahead and pull that one up. Right. Do they have any excess, for their byproducts, right? So let's look at their financials real fast. So revenue growth is green year over year. Let's see here. We got some net income. So net income is a little rough, 21 to 23. So that's not always a good factor there, but it is a mining company. So they have a lot of debt and heavy equipment and stuff. Regulatory fees. Their share changes year over year is not good. It's red. Free cash flow is okay. But again, 2021 to 2023, those losses kind of outperform the remaining 2 years, that they were profitable in free cash flow. And free cash flow, just for those who don't know, that's just the amount of like take-home cash that a company has after all their stuff's paid for. So I use the analogy of a food truck. So you got to buy like hot dogs and buns, and you got to buy a permit and fuel the truck and maintain the truck and pay your worker and things like that. And then the money that you take home in your pocket after all that is your free cash flow. So for a company, they have things like leases. They've got to buy equipment. They've got to maintain payroll, accountant fees, all kinds of stuff, taxes and things like that. That's their everything pulled out. What's left is their free cash flow. So you want to see that increasing, because this is the number one factor for investors, because that's the money that's available to the market. So we got to make sure that we keep an eye on that free cash flow. Balance sheet, or balance, if you will, if you're on the French side of things. So total current assets, total current assets, total assets to total liabilities, current liabilities. So there's about a 2-to-1 on total current assets. So the current ratio should be about 2. Liabilities should be about 3.3, I think. So that's not bad. It's positive. That just means that they can pay their bills and stuff like that. So it tells me that they're shifting their money into, paying their debt and probably acquiring things. So that might be good, might be bad, but net cash. So their net cash is red year over year for a long time, right? And these are in the millions. So you get $500 million in net cash debt every year. So not the greatest. Let's just check your cash flow, net income. Again, 2021 to 2023, whatever happened there, I'd have to look at the SEC filings. Whatever happened there kind of set this company back quite a bit. Now, their operating cash flow during 22 and 23 is different. So whatever happened in 2023 must have kind of helped restore, but they definitely moved their money around quite a bit. All right, net cash flow, it's not terrible. So I wouldn't say this company's bad. It's pretty middle of the road for a mining company. I'm not going to look at all of them. I was looking for dividends, but they don't offer them. So in this case, I would just look for speculation when there's directional volume, or just trade structure. So you've got, let me just pop out here to the week. So again, if you weren't on the lifetime stream yesterday, you've kind of got this area here. You've got kind of another range right there. You've got another range probably up here, maybe. So I would probably just be looking for trades between those zones. So in this point, you're kind of approaching the top of this one. So it'd be very risky. So in this case, I would probably just do shorter term scalps when the directional volume is there. And I probably wouldn't lose any more than a candle. Like if I were to trade this, I would just enter on a new candle or some justification. And then the bottom of that candle would probably be my stop loss, if that makes sense. Like I would just want to keep these very tight. And that's kind of all you can do in a situation like that, because that downside potential is so much bigger. And you don't want to buy something like this and hold it, especially if it has potential to come all the way down here below like 450, right? Because then you're losing 50% of your value. So you got to be careful, especially with mining companies, because one regulatory notice can crash these stocks, or if they lose a permit, or if they just don't get a successful bid on something. You have to be really in tune with the industry in order to trade these successfully, unless you're just speculating. And if you're just speculating, then you want to just keep those stops nice and tight in most cases. And again, I can't tell you what to do, but it's a no good. Yeah, Lee's watch list. So yeah, if anybody doesn't already watch that, make sure you favorite that channel. He posts them every morning as much as he can. Sometimes he's got like personal stuff, but he posts them as often as he can. And he also posts the recaps. So there's proof of concept there, and it's good stuff. And yeah, okay, good. So Death Gun and Majestic, you guys are going to touch base with that strategy. Beautiful stuff. Hopefully we got some mindset stuff here today that'll help you guys. Let me also just peek back at NVIDIA here. Just want to look at it. Would you look at that? So it looks like we might be coming back for the retest here. We had the initial 15-minute candle, then the 5-minute candle closed outside. Now we can look for a 1-minute retest for continuation to the downside, potentially. And that's for a longer trade. Obviously, the market opened just sold straight down. You can't really do too much in that situation. So, all right, I'm going to end the public side of this, the live streams on social media. So thank you all for watching. And let me put that link in here as well. There is a link to a page that you all need to go to and put your email in there, that it will sign you up for reminder emails, so you don't forget about Lee's live stream. I'll put it here in the chat too if you guys want. I mean, you guys that are here regularly, I guess you guys don't need to do that, but I want you guys to go do that anyway, so that you don't miss that stream on Thursday morning at 9:30, or I will pop up in your car. You will adjust the mirror because your spouse will probably drive before you, and then or maybe an older child, and I'll just be sitting in the back seat saying Thursday 9:30. Why aren't you in Lee's live stream? So I can only do one person per day though, so I don't want anyone else to miss, because I don't know when you guys go to work. So you got to submit your work schedule, and then we can make it more efficient and help everybody else catch a stream. But it's just better if you guys show up on that stream. So let me end the social media part. Thank you all for hanging out. I'll be in the Discord here.